folks, welcome back to the channel. Here's another SPY options update for week 11. There's about 9 minutes left in the trading day for Friday, March 17th. A lot of options are expiring today. I have short calls at 392 up here and then short puts at 388. So I want SPY to finish today between these two purple lines. And if it does, then all of my options would have expired worthless. So I have a lot of lines over here, but you can see basically there's this triangle here that looks like it's moving towards the center point, which is the end of the day, this blue dotted line. And hopefully it's going to end the day in the next 7.5 minutes between 388 and 392. So here are some of the trades that I did for today. Most of these are 0 days to expiration. These two up here are rolls because I had a bull put where I was short 390 and then bought 389 for protection, but I don't want to risk it because there's a chance SPY will close below 390 today. I mean, it's pretty much right on the edge there. So I decided to roll that forward from today until Monday, March 20th, and I rolled it up. And I did get a credit for this. Earlier this morning at 9:30, I rolled 4 to get 25, and then I'm rolling 1 more to get 31. But other than that, these here are all of the SPY options that I traded today. So let's start with the morning. I did this one at 8:25, which is a bear call, 394, 395. So that was around here, 11:25 Eastern. And I decided to go bearish on the market because here, let's go to the 5 minutes chart because this is what I was looking at. So at around 11:25, I noticed the SPY bounced off of the blue line, the 21 EMA, and the MACD, which is down here. It's still below the 0 line, which is here, and the blue line is below the signal line. So these are all bearish signals. So I thought the market was going to go lower, which is why I sold a bear call at 394, 395. So that's all the way up here. So that's definitely going to expire out of the money today. And then the next one I traded was 941. This one was a bull put. So this is the opposite sentiment. I decided to go bullish here. 386, 383 bull put, meaning I sold the 386 put and then I bought 383 put. The difference between the two would be about $9. So why was I bullish here at 941? So that would be about 1240 right here. Okay, because the price action has gone up and the 9 EMA, the green line, is above the 21 EMA. Plus, if you look at the MACD, there's a lot of green candles over here, which means the blue line is diverging away from the signal line. So that's bullish. So at 1240, I thought the stock market would go higher. So that's why I sold a 386 put, which is down here, this bottom purple line here. So you can see that's quite far away. So then throughout the day, I put in these two, 392 and 388. I sold 392 call spread, and then I also sold 388 put because it was kind of just within this range. And if you look at the MACD, it's kind of just hovering around this 0 point, like it's not going as low as it did in the morning. So in the afternoon, I wasn't expecting too much of a big move from the market going into the close. So that's why I put these two on, 392, 393 bear call, and then I also bought 388 puts. And it looks like it's the end of the trading session now. It's 1 o'clock. Okay, so the stock market closed and SPY finished just over 390. So I didn't actually have to roll my 390, 389. But now I don't have to risk SPY going below 390 in after hours trading. Okay, so you can see the last minute there was a pretty big increase. So all of my options should have expired worthless. I want to point out another thing over here with my 386, 383 bull put. I put on 5 positions at 941, as I mentioned earlier. But if you notice at 1143, I actually sold 3. So I closed 3 out of my 5 positions at 17, and I took a loss because I paid 17, but I received 9 for each of those. But I didn't get rid of all 5. I just got rid of 3, and I'll show you why at 1143 I decided to sell 3 of my positions. Okay, so the 386 line is down here. So looking at the 5 minutes chart here at 242, or let's say 240, which is right here, I decided to sell a few of those positions because even though the market was still, pretty far away from 386 at that time, that was around 389, I decided to de-risk a little bit and sell part of my position because the price was below the green line, the 9 EMA, also below the blue line. And more importantly, it's below the red line, which is the 50 EMA, which represents the trend. So as long as the market stays below the red line, it means it's likely going to head lower. So that's why I trimmed some of my position here. Of course, in hindsight, the stock bounced back. So I didn't have to close those positions and basically left $17 times 3 on the table. But at the same time, if the market had continued to go lower, it could very easily drop to 386 by the end of the day. And I didn't want to hold like 5 positions that was going to do that. But anyway, that's why I was playing both long and short today. And if we take a look at my options expiring today, these are all the SPY options here. 1, 2, 3, 4. These are all the combos anyway. You can see the average price that I received by selling these options and then what they're worth now, which is all 0. So the 386, 383, there's that negative P&L. So I lost $29 by selling those 3 pairs, but I do have some unrealized profit here to offset that realized loss. Looking at individual stocks, these are the 2 388 puts, and I sold these pretty late into the session. Let's see what time that was. 388 put, 1241. So that's 19 minutes before the market closed, which would be like 340, somewhere around here. It looks like the market wanted to stay within this yellow wedge. Plus, if you look at the MACD, it's on its way up. The blue line is above the signal line, and all of these are green. So I'd rather be more bullish than bearish at this point, which is why I sold the 388 put. It wasn't much. I got like $10 times 2, and then you minus 138 for commission. But overall, that expired out of the money. I think the delta was around 5% at that time. And I'm going to mention this next week for my Google's options, but I did roll my 97 call option this week to 98, which expires next week. And it was just a small credit. So if I add up all of my SPY trades for today, so that's a total of 174, and there's $34.77 in commission. So that's a total of 139 for today. And adding up the other 4 days from the rest of the week, that's a total of 342 in net credit after trading commissions. I did go a little bit more conservative this week, so no large gains or losses, but just a steady increase of 342, which is about 1% on my initial $30,000 capital. So for week 11, I made a 1.14% return, and I'm up now to 12% return for the year so far. In terms of how the SPY did this week, 5-day return 1.1, so about the same. So if someone bought the SPY at the beginning of this week and just held on to it until now, they would get the same return as I got from my options trading. And then year to date, 2.02%. So in terms of overall, if we take a look at the graph down here, SPY is ticking up this week, and my returns are going up as well by roughly the same amount. So heading into week 12, these are the options that I have open. Just a couple of bull put spreads. 1 394, 393 expiring on Monday. If SPY goes up a lot to like 394 or 395 on Monday, then I might roll this one into Tuesday, which basically will leave me with 5 positions of 394, 393. But otherwise, if the market goes down, then both of these will probably expire out of the money. Going into next week, I do think SPY is more likely to head lower than higher because this is looking at the daily chart. And you can see today we rejected off of this 200-day moving average. And the MACD here is below the 0 line, and the blue line and the signal line are both heading down, which means it's likely that the market is going to go lower. Thanks a lot for watching. Good luck with your investments, and I'll talk to you in the next one.